my YouTube. So I've been streaming on IG. This is my girl, Ms. Julz. She is a mortgage partner here at TDR, and she's been hosting the Tea Time with T live on IG. And we just thought, why not do it on YouTube too? So that's what we're up to. And so we're queuing everything up. Hi, Julz IG. So we're queuing everything up. Ms. Josselin is going to be our hostess today. So I'm really excited to be working with her again. She came back full time last week. So Tea Time with T is a weekly series that we're going to focus on one topic. This week's topic is
mortgage credit.
And yesterday, what did we talk about?
We just talked about credit in general.
Just general
setting
credit.
Up the theme for the rest of the week.
But we didn't know that the volume wasn't working yesterday. So no, you couldn't hear me. You couldn't hear me. You couldn't hear me. So today we will be discussing. The format is, she asked me kind of like, what's my day been and what's going on.
So let's say hi to them.
Hi, my name is Teresa Timms, president of TDR Mortgage and Real Estate Group in Upland, California.
My name is Julz. I'm Teresa Timms' mortgage partner. So I normally host, but
yeah, she's like, oh my gosh, she's normally the hostess, but today we have Miss Josselin. Let's see. So we got Miss Joss.
On Facebook Live. Hi, everyone.
YouTube Live. YouTube.
So yes, it is on YouTube.
Okay. So, like I was telling you guys, Tea Time is a weekly live series where we delve into a topic weekly. We cover it Tuesday, Wednesday, Thursday from
like 4 to 4:15 is what we're shooting for. But we were having some audio issues yesterday, and we didn't even realize that. So we were just troubleshooting right now.
Yeah. So I'm really happy to have Julz on my team because I feel like she's coming up with such awesome, amazing questions. And as an originator, I've been doing this since 1998. So I take it for granted all the little things that people don't know. So it's nice to be able to kind of get out of my head, take a break in the middle of my crazy day, and join all my IG and my YouTube people. And then so I invited Julz since we have Josselin today. So go ahead, Miss Joss.
So the first question that we have is, what have you been up to and what's new in the market today?
Well, today is another day in mortgages where it's just nonstop phones, calls, figuring things out. When you get a loan approval and you see a condition on there that you were not even aware of that guideline. It's funny in mortgages, I've been doing this again since 1998, and I don't know everything. I just know most everything. So when something pops up that I don't know about, I'm really thrown off. So today I got sidetracked on something, but I'm thinking of a plan to resolve it. And so mortgages is like just one big puzzle. So I'm a puzzle solver master, and I'm working on a lot of refinances and shopping rates. Rates look great. Purchases, I'm helping people purchase homes, and I know that people are a little intimidated about the market and what could possibly happen in the future. But if it pencils and it makes sense, there's a lot of people purchasing out there where it makes sense. So, another thing too is, did you know you can do a cash out refinance and take out money for student loan debt, and it hits like a regular rate and term? So I have a loan right now. I'm doing a cash out refinance for a student loan, a couple paying off a student loan, and their rate is 2.5% versus like 2.8 if it were to be a cash out. So it's a very advantageous time to do some debt consol on those student loans. Mm-hmm. So that's what I'm doing, and that's what I've been up to.
Perfect. The other question is, if I had a recent late payment within the last year and it affected my credit, can I still purchase the house or refinance?
So mortgage credit is it's the same as basic credit, but there are some like do's and don'ts. So the question was, let me look at the question.
We spoke about this yesterday.
So if I had a recent late payment, within the last year will affect my credit. So there are lates and there are mortgage lates. Mortgage lates are a bad thing to have when you're looking at refinancing. So depending on your loan and depending on many factors, oftentimes you're only allowed to have 1 times 30 in 12 months and 2 times 30 or 1 times 60 in 24 months. However, we run these loans through an automated underwriting system through Fannie Mae or through Freddie Mac. So if it comes back and it's acceptable or allowable, we can still do it as long as the lender we're placing your loan through doesn't have an additional overlay. So mortgage late, and then, the forbearance thing just came about. So then there's also different rules for forbearance and forbearance lates and things like that. Now, if you're newly looking to purchase and you had a recent late payment, what late payments are they show up as additional risk to the lender. So, I mean, if you have late payments and you want to go buy a house, it's like, why would we lend you $500,000 when you can't even pay your $10 ARCO card or your Shell card, or if that's even a thing, So, and I do know accidents happen. Sometimes people have a late and it will drop their points 70, 80, 100 points. So when you're preparing to buy a home, you need to your goal is to not have any lates. And if for some reason you do, you really need to kind of talk to your mortgage advisor to find out, how can you move around those? What programs do you qualify for?
Perfect. The other question is, I'm applying for a loan to purchase my first ever home.
Woo!
And I've gone to a few different companies to see who can get me the best rate and service. But they all want to pull my credit. Will that hurt my credit? If so, how drastic will my credit be affected?
Okay, that's such a great question. And we overcome that objective all the time because people don't want to have their credit pulled because they're afraid that it's going to hurt their scores. So a few years ago, I don't even know how many years ago, the credit bureaus got sued for pulling people's scores down when they ran their credit. Because let's say you're shopping for an auto or you're shopping for a house. And what do? You go and you try to get quotes to find out what the payment's going to be. So you might go to 3 or 4 different auto companies. And mortgages, I see people go 2 or 3 times. And so at the end of the time you get shopping, you pull your credit. In the olden days, they used to, once you got ready to buy your car and let's say you went to your fourth auto or 5th auto dealer, your scores were too low. You couldn't even buy the stupid car. So they changed all of that. If you're shopping within a period of time, let's say you're shopping within a 10, 12-day period of time, and you talk to a handful of lenders and have your credit run 2 or 3 times, your scores are not going to drop. But then if you wait another 3 or 4 weeks and then go have your credit pulled 5 times and go have it pulled another couple of times, that is not good. So you want to be strategic when you have people pull your credit, and you want to shop within like the small, tight time frame, because too many inquiries can pull your credit down. And if somebody's going to pull your credit, ask them for a copy of your credit report or ask them for a copy of your scores. Don't just let somebody willy-nilly go pull your credit and then they hold your scores hostage or they hold your credit report hostage.
Perfect answer. And the last one.
Hold on just a second. Yeah. I wanted to ask Julz a question. Mm-hmm. So is that something like going back to the other 2 questions, is that something that you've thought about when you're getting ready to buy your house?
So remember yesterday we spoke about it and you told me that it was illegal because we had a client ask us about this one. And then remember yesterday we talked about that too. And it resonated with me and I was like, nobody knows
So
that.
Which one was illegal? I'm applying to purchase my first home.
Remember the credit bureau?
I don't.
It was like if you pull your credit within, how many.
Oh, right. Okay.
So
yeah. So somebody called in. So oftentimes people call in and they want us to do their loan, but they don't want us to run their credit. And I'm just like, okay, so you want me to pre-approve you for a house for $500,000 or $300,000, even $200,000. but I can't pull your credit. I mean, it's a big disconnect. And so that's when we, it's our job to go in and to educate the consumer. Hey, we have to pull your credit. And, what happens when you go shop for a car? What do? They pull your credit. Mm-hmm. So this is much bigger and better than a car. Okay.
Yeah, so anything that somebody asks me and it really sticks with me, I remember to write it down.
Okay. Yeah. Thanks, Julz.
Mm-hmm. Perfect. The last one is there are 3 credit companies that all lenders use when they pull your credit. How do they choose which score they will use?
So there are 3 credit bureaus, and it's an industry standard. When we run we call it an RMCR, a residential mortgage credit report, we pull Experian, Equifax, and TransUnion. And we go with the middle score. And that is an industry standard for mortgages in the entire United States. With every lender that exists, we use the middle score. So hopefully your middle score is, for a mortgage credit, we like to see at least 700. If your score is not 700, then you're definitely going to be an FHA borrower. You're going to be better suited for that. So sometimes you'll see a score variance when maybe a particular collection or some negative credit event happened, but it's only reporting on one bureau. So we see that a lot. And sometimes if that negative event is reporting on 2 bureaus, you may have a 750 and then you've got a 680 and a 650. And when we're pricing out loans, once you go below a 680 on conventional loans, you're not getting that 2.5% score. You're in fact, I think we priced something out just recently, didn't we, Joss, where it was like an 85 LTV or 88 LTV loan, and they had a 645, and it was pricing out like 4.75.
Yeah.
That same exact borrower's loan would price out at like 2.8 if they had a 720 score.
Yeah.
So in mortgage credit, the most important number one thing that you can do is check with your mortgage advisor well in advance of when you're getting ready to purchase, and have them do a hard credit pull. Like, what's the big deal? Have them give you advice as to what you need to do to put yourself in the absolute best position. And that's something that we do a lot here, is that when people call in and they're like, no, we don't have a credit run. And I'm like, well, really, it's more work for me, but I want to do what's in your best interest. So let me pull your damn credit and let me look at it and tell you what you need to do. Because I really like telling people what to do.
She's the boss. That's why she's the boss. If anyone has any questions, please put them below. I think we have a few people. So if you have any questions at all for
Hi, everybody.
Teresa
Hi.
Julz.
I actually got one on mine. It's not credit related though, so we could put it in another video, or you could answer it right now because it's kind of lengthy. So do you want me to ask it now?
Yeah, read it now.
Because we're at 4:28, so we're fine. Tell us some recent changes to FHA for someone to get approved since COVID has hit all of us.
So in loans in general, that's a really good question. If loans weren't already a pain in the ass, then here comes COVID and all their fun overlays. So what happens now is we have to do all this extra due diligence to make sure you're employed. So that goes with FHA, VA, conventional, jumbo. So all through the transaction now, I'm telling people, we used to just get their pay stubs and that was kind of it. And we did a verification of employment and then we closed the loan. Now we get, every time they get a pay stub, send us a pay stub. We do a verification of employment at the beginning, the middle, the end. And then they do another one like the day that it closes or the day before it closes. So there have been a lot of overlays due to COVID. I think FHA is still, the most generous of all of the loans. And self-employed people have been especially hard hit since COVID, and rightfully so, because self-employed people have taken a big brunt of the burden of, business loss and job loss and revenue. Their sales have been down because they've been closed. So on self-employed people, we have to do even more due diligence. We need your bank statement. We need to see 2 months, then profit and loss. It has to match, and you have to prove that, you're doing good. And so there's just all kinds of fun, exciting overlays. Thanks, COVID.
I think that's it.
All right.
I don't have any questions. So thank you guys for tuning in. Those of you that are in here.
Thanks for being an awesome hostess, Josselin.
You're welcome.
You're welcome. Hey, tell us real fast what you're doing here, because you left for a little bit to go explore a different opportunity and then recently come back because you've decided what?
That
I
we're
want
better.
to be a loan officer like Teresa. I think in your lifetime, you come across people that really impact your life and kind of, you see, wow, I could be like her when I grow up. And here I am, growing up, and I want to be in LO, and what better place to be and learn from than Teresa. So that's why I'm here.
Well, I'm excited my baby girl came home. That's all I have to say. And you're already, even though you're not a licensed MLO, you're already 95% ahead in terms of experience and skill set and sales savvy than 95% of the loan officers I know.
I'm blushing. Stop it.
Okay.
Thank you.
Well, I love you, girl. Thanks for being an awesome host. Thank you for being a great guest.
Yeah.
Didn't say much. Maybe next time.
What do you think about her hair?
Yeah,
I
what
just
do you
got it
think,
done.
guys?
I came in early and then I left and now I'm back.
She's a whole new woman.
She's like, what? I'd like to answer some more questions, please.
Well, tune in tomorrow at the same time. You already know. Tea time with T. See you guys.
Adios. All right. Okay, my YouTube fan bam. Let's see.
Yeah, so and now.
So let's see if this works. Because I think the live streaming thing could be kind of cool
Just in case.
to build
And then once it's done,
practical,
it takes
real-time
5 seconds.
information, for those seeking a mortgage. And there's a lot of people on my YouTube channel that are looking for information because I have so many educational. Quiet on the set. These girls don't listen. Anyway, I'm looking forward to doing more lives. So be sure to join us Tuesday, Wednesday, Thursday around 4-ish for information regarding mortgages and real estate. Thank you for tuning in today.